everyone, welcome back to NDTV Profit. I am Mahima Vacharjani, and in this series of videos, we are going to demystify all the key terms related to the Indian Union budget. Whether you are a student, a working professional, or just someone who is interested in understanding how the government handles money, this video is for you. Let's get started. First up, we have the Union Budget. This is basically the Indian government's yearly financial plan. It details how much money the government expects to earn and how it plans to spend it over the financial year, which runs from April 1st to 31st March. When the Finance Minister presents this plan in the Parliament, it's called the Finance Bill. Think of it like a household budget, but on a much larger scale. Next, let's talk about the interim budget. This comes into play when the government is nearing the end of its term and elections are around the corner. Instead of a full budget, the government presents an interim one to get approval for a few months' spending. It's like asking for a temporary allowance until the new government is in place. Now, you've probably heard of GDP or Gross Domestic Product. This is the total value of all goods and services produced within India's borders in a year. It is a key indicator of country's economic health. There are two types: real GDP, which adjusts for inflation, and nominal GDP, which doesn't. Real GDP gives a more accurate picture of economic growth because it accounts for changes in price levels. Another important term is fiscal deficit. This is when the government's spending exceeds its revenue. To cover this gap, the government borrows money. A high fiscal deficit isn't great because it can lead to higher inflation and make borrowing more expensive for everyone else. Fiscal policy is all about how the government collects and spends money to influence the economy. This includes taxes, levies, and government spending. The Union Budget is a key part of fiscal policy. On the other hand, monetary policy is handled by the Reserve Bank of India. RBI is all about controlling the money supply and interest rates to keep the economy stable. The RBI decides how much money banks should keep in reserves and sets interest rates, which affect how much money is available in the economy. The capital budget includes capital receipts and capital expenditure. Capital receipts are the funds the government gets from borrowing or selling assets. Capital expenditure is the money spent on creating long-term assets like roads, ports, powers, and plants. Then there is the revenue budget, which covers revenue receipts and revenue expenditure. Revenue receipts include money the government earns from taxes, interest, and fees. Revenue expenditure is day-to-day spending of the things like salaries, pensions, and that's it. These are some of the key words that you'll hear about when the Union Budget is discussed in July. The first word is primary deficit. The primary deficit is the fiscal deficit minus interest payments. It tells how much of the government's borrowings are going towards meeting expenses other than interest payments. In other words, it is the difference between the current year's fiscal deficit and the interest that had to be paid in the previous year's budget. Next is central plan outlay. It refers to the allocation of monetary resources among the different sectors in the economy and the ministries of the government. The different sectors include energy, transport, social services, general economic services, communications, science and tech, rural development, agriculture, and so on. The next word is public account. The government acts as a banker for transactions relating to provident funds, small saving collections, etc. The Public Account of India was set up by the Article 266 of the Indian Constitution. The public account funds are not government's property and have to be paid back to the people or the organization who have deposited with them. The next word is balance of payments. Balance of payments is the difference between the demand for and supply of a country's currency on the foreign exchange market. In layman words, balance of payments is the difference between the total amount of money entering a country over a specific time period and the total amount of money leaving the country to the rest of the world. The next word is budget estimates. It is an estimate of fiscal and revenue deficits for the year. The term is associated with the estimates of the centre's spending during the financial year and the income received through taxes. In layman's words, budget estimates are the funds allotted for various occupations, activities, and ministries. The next word is capital receipt. Capital receipt is nothing but the loans raised by the centre from the market, government borrowings from the Reserve Bank of India and other parties, and the sale of treasury bills and loans received from foreign governments form a part of capital receipt. Other items that also fall under this category include the recovery of loans granted by the centre to state governments and proceeds from the disinvestment of government stakes in the public sector undertaking. The next word is consolidated fund. Under this, the government pools all its funds together. It includes all government revenues, loans raised, and recoveries of loans granted. All expenditure of the government is incurred from the consolidated fund, and no amount can be withdrawn from the fund without the authorization of the Parliament. Next up is contingency fund. This is a fund used for meeting emergencies where the government cannot wait for authorization of the Parliament. The government subsequently obtains parliamentary approval for the expenditure. The amount spent from the contingency fund is returned to the fund later.
Now, let's try and understand where does the government spend. Now, we've already explained the meaning of fiscal deficit. We've explained where does the government's revenue come from. Now, let's try and understand where does that money get actually spent. So there are two types of expenditure that a government undertakes. One is capital expenditure and the second is revenue expenditure. Capital expenditure is essentially any kind of money that is spent by the government for long-term returns. So it could be building roads, building bridges, building water tanks. All of these are capital expenditure that is spent so that the long-term growth of the company is intact. Alongside this, any kind of spending that the government does on education, on healthcare, on social welfare or such things are also considered as part of capital expenditure of the government. Revenue expenditure is what the government spends on a daily basis, on a day-to-day basis essentially. This may include rent for any kind of government office. It could also include salaries that are paid to government employees across the span of the central government. So revenue expenditure is day-to-day spending of the government, while capital expenditure is a long-term spending of the government. Typically, for a country like India, overall expenditure will always be higher than the revenue. That is because we are a growing country, we are an emerging economy, and therefore the government needs to spend so that the country's long-term growth is maintained, while on a day-to-day basis, the government is able to pay enough people so that the operations can continue. Going ahead, of course, the expectation is that fiscal deficit will lower further. That means the government will be able to tighten its expenditure while also growing its revenue. This is likely to put India in a much better spot than where it was just a few years ago. Hi guys, welcome to NDTV Profit. We are here to take you through some of the key numbers and concepts of the Union Budget of India before the government presents it on the 1st of February. Now, one of the terms that you will hear being thrown around a lot is fiscal deficit. What does this number mean? What do we need to look at to measure this number? I'll explain you through all of this. The first of the definitions is of fiscal deficit. What exactly is fiscal deficit? Well, essentially, it is a total revenue of the government minus the total expenditure of the government. Now, when you're looking at revenue, you cannot, for example, look at loans or borrowings by the government. You have to look at the clear number of how much the government is earning through various activities. Similarly, on the expenditure side, you will look at the various areas in which the government is spending. Now, the fiscal deficit target for FY25, that is a year ending 31st of March 2025, is set at 4.9% of GDP. This is the government's target. It was earlier set at 5.1% when the government announced its interim budget back in February of 2024. After that, in July, once the new government had come in and they had made the union budget announcement, they had said that the fiscal deficit target for this financial year is set at 4.9% of GDP. This is in context of a broader target. By March 31st, 2026, the government aims to bring down fiscal deficit to 4.6% of GDP. So as the numbers are piling up and as things are shaping up in the economy, we can say for sure that the government is likely to meet that 4.6% target. Now, why exactly do people look at a fiscal deficit as a key number? Well, essentially, this shows whether the government is able to manage expenses while also earning its revenue. And the lower the fiscal deficit number, the better it is for the country. Going ahead, the government is also talking about looking at some of the other numbers to measure whether its fiscal policy is working or not. And this other number that they will look at is debt to GDP ratio for India. And whether the debt to GDP ratio is lower, then of course the economy is doing much better. And if it's higher, then of course there's an issue that the government needs to adjust. Fiscal policy is a dynamic policy and it changes over the course of the time that the government is managing it. Now let's try and understand this revenue and expenditure bit. Where exactly is the money for the government coming in from? Well, the short answer of it is you. Essentially, there are certain levels of certain areas through which the government earns its revenue, the first of which is taxes. So income tax that the government deducts from your income, and GST, which it levies on various goods and services across the country, are points of tax revenue for the government. This ensures that the government has enough money to go out and do spending. Some of the other areas of income for the government is interest on loans that it extends to states or other public sector companies. It also earns fees and dividends and profit from public sector companies. Essentially, this is a portion of the profit that the company pays to the government because the government is the largest shareholder of the company. There are other revenue sources as well which you need to look at, which is any non-debt capital receipts. So anything that is not linked to a loan but is capital that is given out by the government in the form of loans extended by the government or disinvestments it conducts through the year. So if the government goes out and sells its stake in a public sector unit, that's considered a disinvestment. So in short, there's tax revenue and non-tax revenue. Tax revenue is stuff that you understand, which is income tax and GST, fees, dividend income, profit, interest on loans as well as loan recoveries, and finally disinvestments by the government in public sector companies.
Did you know that days before the union budget, the officials of Finance Ministry are logged in at the North Block? You might have seen visuals of the Halwa Ceremony just days before the union budget. This marks the end of its preparation. What happens after that? How is the budget kept a secret just days before the announcement? We unpack all this for you, but watch the video till the end. Several officials under strict surveillance are logged in and are allowed no contact with the outside world as they prepare and print all the documents related to the union budget. Only the finance minister is allowed to enter the basement of the North Block in central Delhi, which houses the printing press. Around 100 officials and other staff directly involved with either the making or the printing of the budget are kept in absolute isolation and completely cut off from the outside world until the finance minister finally presents the budget. Also referred to as the quarantine period, it entails 24/7 surveillance by the Intelligence Bureau, no contact with the family, supervised phone calls, a strong network of CCTVs, electronic jammers to prevent the information leak, foolproof cybersecurity, among the other things, are strictly imposed. Can you imagine the level of security here? Only the finance minister is allowed to move in and out of the area, but mobile phone usage inside the basement is restricted even for the top minister. Not only is a team of doctors deployed inside the finance ministry to handle any kind of medical emergencies, but the members of the finance ministry are also provided with food, clothing and other amenities during this crucial 10-day period. This team of police and officials all guard what's inside this red Bahi Khata, which is the finance minister's budget speech. Well, the red Bahi Khata doesn't carry the budget papers anymore, but a tablet. In fact, to ensure the secrecy, budget used to be handed over to printers at the midnight of January 30th, 2 days before the budget was announced. Since the budget is now digital, it's carried by the finance minister to the parliament and revealed only on 1st of February. Wondering the reason behind the strict surveillance? Well, it lies in the past. In 1950, a portion of the budget was leaked when the printing used to take place at Rashtrapati Bhavan. This was when John Mithai was the finance minister. After the leak, the printing was moved to a government press on Minto Road from Rashtrapati Bhavan from 1952 to 1980. Since 1980, a government press has been set up in the basement of the North Block in the Secretariat building, and that till date is the permanent printing location of India's budget. Well, as the times has changed, so has our union budget. Even though the budget has gone the digital way, some things remain traditional. A few copies are still printed for official records, and Halwa Ceremony still continues.